What's up? How's it going? Welcome to Blockchain Tech and Finance News with me, your host, KinToshi. If you're on the YouTube side, please do subscribe, turn on the bell notifications. I'm rereading the news from the other day because I'm going to scratch that episode I did because the audio, for some reason, I had the condenser mic back on its gain. So I couldn't really get for a reason, the gain was too high, sorry. And wouldn't really pour it over my vocals, so it was a kind of scratchy vocals. So I'm going to reread this news real quick, and I will be having new articles coming out here on Blockchain Tech and Finance News. So yeah, if you're on YouTube side, please do subscribe, turn on bell notifications. I am going to check if it is successfully, also briefly, so bear with me, streaming to Twitter this time. I know there's some issues of the stream. Okay, so it is live this time. So if you're on the Twitter side, you can also watch this live now as well. And I'll go ahead and I guess share it. Why not retweet it out? Yeah. So if you're on the Twitter side, you can retweet this stream. Chat. I'll keep the Twitter stream up because I can't actually see the Twitter chat stream. I can see y'all on Twitch, YouTube, DLive TV, Discord, and Matrix Gaming IT on Trovo.live. I'm streaming to Facebook as well, but for some reason I can't see the chat on Facebook. It looks like it's not porting in. So either way, let's go right on to the news. I'll open, again, like I said, I will open the stream chat on Twitter. I'm streaming to Facebook as well, but all right. Trying to adjust some microphone levels to turn down background audio noises coming into the microphone. But anyways, I'm going to go to this transition. I'm going to read this first article, the next article, get a few pieces of articles here. And you'll see all of these articles on the recap in the description on the YouTube and the Twitch one. YouTube stays permanently as well as other platforms, but the Twitch one will expire, but they go into certain categories on there. So you can find blockchain tech and finance news, whatever gaming shows are on there as well. All right, so actually, maybe I should turn this on. I know you can find Coding Ken episodes. I'll be doing those at night. So if you're wondering, like, what does Coding Ken mean? So I have another show. I just have the overlay on. Rather than just sitting here blank, like such. You can see the overlay there. So let's read through this article. And I just want to check my vocals briefly. All right, let's see how my vocals sound on this part. I'll probably keep it capped around here. I'm just trying to, before the microphone was clipping out, picking up too much background noise in the background. Now I'm trying to turn the input down. So I'll test that, and I'll start reading through this article here, and then a few other articles as well. Try and do this right. I'll probably keep it capped around here. I'm just trying to, before the microphone was clipping out, picking up too much background noise in the background. Now I'm trying to turn. All right, so this should be good. Major crypto exchanges stop letting Chinese users sign up after Beijing's renewed crackdown. So who will be one of the world's, so the key points of this article, this is from Arun Karpal, a writer for CNBC articles. Huobi, one of the world's largest cryptocurrency exchanges, said it has ceased new accounts opening for mainland Chinese users. That's nothing new. As we know, it's the process that's happening. It comes after the People's Bank of China declared all virtual currency-related activities illegal and took aim at overseas exchanges providing services to users from the mainland. Huobi said it would gradually retire existing accounts of mainland Chinese users by midnight on December 31st, 2021. So, in Huobi, one of the world's largest cryptocurrency exchanges, says it's ceased new openings of account in mainland Chinese for the mainland Chinese. Yeah. The People's Bank of China declared all virtual currency-related activities illegal, including trading on Friday. The Chinese Central Bank also took aim at overseas exchanges providing services to mainland Chinese users. Huobi, one of these exchanges, said on Sunday that it would end account registrations for new mainland Chinese users. The company will also gradually retire existing accounts of mainland Chinese users by midnight on December 31st, 2021. Meanwhile, Binance, one of the world's largest cryptocurrency exchanges, said the account registrations using Chinese mobile phone numbers are now blocked. The Binance app is also no longer available for download in China. Binance takes its compliance obligations very seriously and is committed to following local regulator requirements wherever we operate, a spokesperson told CNBC. This year, Chinese authorities have intensified a crackdown on cryptocurrencies that has large Bitcoin miners and trading, but China's tough stance on cryptocurrencies is not new. Authorities on the world's second largest economy, have long been worried about the impact of digital coins on financial stability. So I guess we're just, not sure why this is loading so slow. We'll keep reading. When I hear something, I'll go back. 2017, China shut down local cryptocurrency exchanges and banned so-called initial coin offerings, ICOs. So that was in 2017. A way to raise money for crypto companies by issuing digital tokens.
About tax.
Many of China's cryptocurrency exchanges moved offshores as a result of that, but loopholes have remained that allowed mainland Chinese traders to buy and sell digital currencies on these offshore exchanges.
FinTech TV co-founder and Delta Blockchain fund founder. And Kavita, I don't know, the market seems to at times come to grips with China's actions, and there was nothing completely new or shocking about China, given what we've seen up to this point, probably. And they've got their own concerns with their own currency and everything else. The question is that if China can do it, can other countries do that? If they, for whatever reason, if the United States decided, look, this is threatening the hegemony of the dollar, couldn't they do it? Isn't that something to worry about? It's still 43,000.
Hey, Joe, good morning. I think this China's crackdown news is, first of all, nothing new. It's been happening. You have not been allowed to convert your RMB into any sort of cryptocurrency in the last couple of years. And so I think it's the old news which gets sensationalized, it affects the market, and we all start talking about it. But at the same time, I think having a USD or a fiat currency pegged coin versus actually going into a cryptocurrency, which no individual government can just go and print, is a complete different story. You can have the buckets between RMB to USD or USD to Bitcoin, but at the end of the day, the cryptocurrency market is very much governed by the global markets which are happening and which is within crypto and the products which are getting built on it. So you could see, though, there was a 5% down last week within the news of it, but Bitcoin market picked up, and especially look at Ether, which has been very much purely resting on 3K, went down a little bit, but picked up again.
Right. The what does it matter in China whether that country decides that Bitcoin is not going to be part of the ecosystem? And wouldn't they have to actually enforce that? And will they? Like, do they enforce that the kids aren't watching more than 3 hours worth of TV or video, whatever it is that they're enforcing? Can people still do peer-to-peer transactions in China, or is the risk too great that they could be punished harshly?
So that has always been a black box, right? We are talking about a country, even IMF doesn't have a real numbers, and you just have to take the artificial GDP or the inflation numbers which you get from there. This is the country we are talking about who is basically doing a crackdown on education of all the things, right? As you just mentioned. You have Hobby, you have OKX, you have two biggest exchanges still running out of China. You have, they are doing peer-to-peer transactions on crypto. That's been going on. Hobby listing is still very important. OKX listing is still very important in the whole token economy in the crypto world. But can you have every other shop? The only thing they say, you cannot convert RMB into crypto, but if you are already in crypto, anything and everything happening there. Some of the biggest projects are coming out of Hong Kong. So for me, it is just like, again, hey, we want to stay control. We want to know exactly where RMB is going and where USD or any other currency coming into the country. But ultimately, the beauty of cryptocurrency is that you really just can't control that. You can control your borders, but this is borderless. And that's what I love about cryptocurrencies.
What kind of body language are you seeing from the most recent comments from what is happening in the United States, Kavita and Gensler, regarding, I don't know, stable coins, regarding an eventual digital currency from the U.S. government? What do you think is going to happen?
I feel like I always have said, having regulations are good, give us clarity so that whatever direction we go, we can go in a good way. But like going back to the same thing, which I have talked again and again, you have to be smart enough to do it. And we did think that Gary coming, teaching at MIT, his courses, coming into the space, would understand how this whole decentralized finance world moves with 4 to 5 different uncustodian wallets. You just can't keep on taxing that. If stable currency is a security, then come out and lay the rule that this is what securities are. Tracking down on exchanges, tracking down on layer one solution without having clarity is my biggest problem. You have the clarity, let people decide, is this the product they want to build, or is this the product they want to build in this country? Look at what Portugal, Greece, and some of the European countries are doing. Portugal went out and said no capital gain and losses or no capital gain taxes on crypto to attract all this talent out there. We are literally building Singapore, Portugal, now Greece, different hubs. And I think we should really, really make sure that we don't, we regulate it, but we regulate it to really support and save retail investors, but not really shut everybody down the opportunity.
Try to stop this ad there. Yeah, we'll keep reading about that. So that's that part from CNBC.
Now,
yeah. So this article on CNBC. All right. If you're on the YouTube side, please do subscribe, turn on the bell notifications here to blockchain, tech, and finance news. We'll be right back after this transition. with another article. Grab the article up here. I used to leave them all open on the tabs, but now it just kind of bogs. Having like 20 articles open. So a hamster has been trading cryptocurrencies in a cage rigged to automatically buy and sell tokens since June and is currently outperforming the S&P 500. Goxbox, the trading box. The Goxbox. A hamster named Mr. Gox has been trading cryptocurrencies in a rigged box since June. The hamster determines which crypto to buy or sell by running on a wheel and strolling through one of two tunnels. Since it started trading on June 12th, Gox's crypto portfolio has returned 24% as of Friday. A hamster in Germany is redefining a random walk down Wall Street. Author Burton Malkiel's belief that a blindfolded monkey throwing darts at a stock ticker listed in the newspaper could do just as good as a human investment professional. The live stream hamster Mr. Gox has been independently trading a portfolio of various cryptocurrencies since June 12th. So far, its performance has been impressive. As of Friday, the portfolio was up nearly 24%, according to the Mr. Gox Twitter feed that documents daily performance along with every trade made by the hamster. Mr. Gox's performance outpaces Bitcoin and S&P 500 over the same period. Mr. Gox caretaker built the Gox box, a crypto-rigged office attached to its larger home that gives the hamster the ability to perform various exercises that then execute specific cryptocurrency trades. The hamster can enter its office whenever it wants to make trades. First, Gox runs on the intentional wheel to pick which one of about 30 cryptocurrencies to trade. Once the crypto is chosen, the hamster runs through one of the two decision tunnels that trigger either a buy or sell trade of the chosen cryptocurrency. The top cryptocurrencies currently held by the hamster include Tron, Ripple, XRP, Cardano, 88, and Ethereum. Gox's portfolio was funded with the euro equivalent of $390, according to a report from Protos. Mr. Gox's unidentified caretaker and business partner told Protos that the trades the hamster makes are automatically set to 20 euro increments. There are plans to give Mr. Gox more control and let him intentionally pick his buy amount if the interest in his channel keeps growing, the business partner told Protos. Mr. Gox so far has generated profits of 77 euros as of Friday afternoon. His portfolio hit a high of nearly 580 in mid-September. Then his performance was nearly 50% in less than 3 months, according to performance data compiled by Protos. But since then, the recent crypto sell-off put a dent in the hamster's profits. But a profit is a profit. Mr. Gox likely understands that. Mr. Gox is happy to see that some of his investments finally pay off, the business partner told Protos. So we got Mr. Gox trending with Bitcoin. So I'm going to grab up the next article. And open up the transition for the next article. Oh, wait, it's from the U.S. Sun. Red flags on how to spot a cryptocurrency scam, from getting tips from friends to being promised returns. Scammers come in many forms, especially in the cryptocurrency space. Use these 3 tips to spot scammers and avoid falling victim to malicious schemes. There's blockchain scams. Cryptocurrencies operate on blockchain networks. Scammers often claim their blockchain is in development or about to be released, but all legitimate cryptos will have an accompanying website to verify the currency. Users can type the name of the crypto into any search engine with the phrase blockchain explorer or blockchain scan to find the connected blockchain if it exists. Hot tips from friends. Multi-level marketing scammers will often use the language of cryptocurrencies to entice people to join as members. Cryptocurrencies do not have members, they have investors. Avoid taking these investing tips from friends and family. Instead, turn to price tracking websites like CoinMarketCap, CoinGecko, or CoinPaprika. And always do your research before investing. No guaranteed returns. There are no guaranteed returns when it comes to cryptocurrencies. So when someone mentions guaranteed returns, they're often scammers. There are no way to eliminate the element of risk from cryptocurrencies, although scammers try to convince you otherwise. Check out these other ways to spot scammers. So there's a link here. Again, I have all these links in the description of these episode recaps of all these articles. So you can even click there and go to a further article about this. So that's from the U.S. Sun. Julia Fields, writer for the U.S. Sun. They're in this article. So I'm going to go ahead and grab up the next article and spin up more reading here. Because up next we've got how not to lose money in crypto this year. So if you're on the YouTube side, please do subscribe, turn on the bell notifications. Here to Blockchain and Finance News. So this is from how not to lose money in crypto. A brief little article here. Investing in crypto. Investing in crypto, you need to do your own research and avoid these mistakes. It's from Rojas Nagpal, writer for Gadgets.ndtv. Cryptocurrencies are notorious for being volatile. Where there is volatility, there is a huge opportunity to make and lose money. If you're investing based on your tweeting or what a self-declared expert, take a chance that it will cost you. So here are 10 simple rules for you to help understand what are common mistakes you should avoid to be smarter with your money. Don't blindly follow experts. Always do your own research. You will find crypto experts in every nook and cranny on the internet. You may find hard to believe, but there are no real crypto experts. Cryptos are too volatile for anyone to be able to accurately predict their prices. So do your own research. Don't get into low liquidity cryptos. You could get stuck badly. Liquidity is the ease with which a crypto can be bought and sold. If a crypto has low liquidity, you may not be able to sell it easily when the right time comes. And instead of making profit, you will end up stuck with it. Don't try to time the market. When you look back in time, everything seems very logical and obvious. You may regret not having bought Bitcoin at $1,000 or not having sold it at its peak. The regret will get you nowhere. Do your research, and if you feel that a particular crypto is undervalued, then buy it. Or if you think it's overvalued, then sell it. Buy the rumor, sell the fact. This ideology works in most financial markets. Let's say a particular crypto project is expected to announce some game-changing new features. When you first hear of this, buy the crypto. As more people start hearing about this, the price will keep rising. When the actual implementation of the feature is announced, suddenly the price will fall. Why? Because the early buyers will sell and book their profits. A word of caution: make sure the rumor is based on reality. So that project is actually going to release a product for users. Don't play with derivatives unless you are a pro. Derivatives are financial instruments that derive their value from some asset. Example: interest rates, crypto prices, etc. Futures and options are common types of derivatives that were designed to reduce risk and hedge against uncertainty. But in the wrong hands, derivatives are a recipe for financial disaster. So don't play with derivatives unless you really know what you're doing. Don't buy NFTs unless they give you some exclusive rights. Non-fungible tokens, NFTs, are the rage nowadays. You hear pixelated graphics being sold for millions. Don't fall for this hype. Unless an NFT gives you some exclusive right to the art, ownership, it is worthless. Never short Bitcoin. Never. Shorting or short selling is when you sell crypto that you don't have in the hope that its price will crash. Never short Bitcoin. The crypto industry actually has a term for an investor who goes bankrupt by short selling Bitcoin. The Astraking. Lord Astrake was a Romanian Bitcoin trader who made a ton of money shorting Bitcoin, and then he shorted it at $300. Bitcoin zoomed to 600 in a few weeks, and Astrake went bankrupt. Don't leave your cryptos on an exchange. There is a saying in the crypto world: not your keys, not your coins. When you keep your crypto in a centralized exchange, you don't really have any control over it. If the exchange gets hacked or its owners vanish, you lose all your crypto. So always store your crypto in your own wallets, paper, hardware, or software. Learn to use wallets, paper and HD. If you accidentally delete your mobile banking app, do you lose your money? No, you can simply reinstall the app. That's because your money is held by a bank. Crypto is very different. If you delete your crypto wallet without backing it up, you will lose all your crypto. So learn how to use crypto wallets, paper, hardware, and software based wallets. Read the future. I'm not going to read that part. I'm not going to mark it for the this thing. Anyways, so that's that article there. And I'm going to spin up next article. So I got two more articles here. Next being next problem for the stock market in Morning Brief from Yahoo. So here for this from Brian Sozi at large on Yahoo Finance article. First brief, get the Morning Brief sent. Blah blah. I'm not going to read that part. All bad news is priced into the stock market until it isn't. I lost count long ago. The number of financial services pros that no matter what risks were barreling straight down on investors would tell me it was already priced into the valuations of public companies. Back in late 2007, when two Bear Stearns, ticker symbol BSC for financial markets historians, hedge funds seemingly blew up out of nowhere. I remember making calls late at night from inside a conference room to contacts to find out what in the world was going on. Nothing to see here. Stocks will climb the wall of worry, my friend, is the general gist of how these calls collectively went. We all know now what would happen next. Bye-bye Bear Stearns, bye-bye Lehman Brothers, and almost bye-bye to the financial system. The S&P 500 went on to bottom out at 666 on March 9, 2009. Many other examples of the bulls downplaying risk in the decade plus since the Great Recession. I find myself at a similar crossroad today with the bulls. The backdrop is one with far less worry issues than back in 2008 and 2009. I have asked bulls about the impact to stocks as the Federal Reserve prepares to end its free money and orgy in 2022. Fed tapering is all priced in the market. The S&P 500 is good to go. Okay, so about our country again, inching towards some form of government shutdown, which that's going to if that will hit markets. Debt ceiling deals always get done last minute. Stay hungry and stay diversified. Put forth a scenario where Evergrande isn't bailed out by Chinese authorities, creating a contagion to U.S.-based money managers with high exposure to emerging market debt. Evergrande is just a Chinese real estate developer. It's not that big of a deal. Large asset managers won't be forced to liquidate holdings into a nervous market. Right, bruh? But what I want to tell you is that all of this market cheerleading is BS. The risk is being priced by market goers. None of the factors I just mentioned are priced into the market. Gander market valuations at about 22 times forward earning. The S&P 500's P/E ratio hasn't been this elevated since late 2001, according to the research from market sage Ed Yardeni. In case I am missing something, which is possible, there is no insanely unpredictable health pandemic raging in 2001, wreaking havoc on global business, and a Fed bond buying program pumping up asset markets. Then there are the earnings forecast by the street, which are a key element that supports stock prices. Currently, they appear to be constructed by a bunch of folks that see S&P 500, 5,500 in 2022. Analysts expect third quarter earnings for the S&P 500 to increase a heady 27.6% per data from FactSet. If that number is hit or surpassed, it would mark the third greatest year-over-year earnings growth rate reported by the index dating back to 2010. As of the outside, optimism seems out of whack with 1, where are we in the pandemic? 2, the state of the government headed into October, and 3, the state of business. And that latter item is where I think will prove the big problem to markets as we enter yet another earnings season very soon, in large part because of severely damaged global supply chains. As the Wall Street Journal reports, our ports are brimming with excess containers and byproducts of the unpredictable pandemic, collecting dust due to trucker labor shortages. Not only is that raising companies' cost of doing business, but it's harming their sales and clouding their ability to give guidance to investors. For example, if these problems are beginning to pile up. So it talks about Nike, the sneaker apparel company maker, warned last week a loss of production in COVID-19 stricken Vietnam is among several supply chain issues that is encountering. We're not immune to the global supply chain headwinds that are challenging the manufacture and movement of product around the world. Nike CFO Matt Friend told analysts on an earnings call. Nike went in to slash its full-year sales outlook, blaming supply chain challenges. Shares of the Dow component finished last week down 4.5%. In Costco, a warehouse retailer is having supply chain issues of its own. We're putting some limitations on key items like bath tissue, towels, signature water, high demand cleaning related SKUs related to the uptick in adults related demand, furniture delays, and some shortages across traditional rollouts. Times to go from 8 to 12 weeks up to 16 to 18 weeks. Costco CFO Richard Galante said on an earnings call last week. Meanwhile, Costco is double-digit inflation in some categories, which has weighed profit margins. Costco's stock fared better than Nike's last week, rising 2.5%. Analysts like the company's same-store sales trends and cash position. I mean, it rose past Nike, probably I would say, because Nike's not such a necessity as what Costco doing for necessity for what people need. So there's more liquidity of revenues, I would feel like, rather than people buying Nike sneakers. FedEx, the mighty transportation giant, has a terrible earnings last to supply chain issues, inability to hire enough workers. FedEx said its quarterly results were drilled by $450 million due to labor shortages alone. Notably, at its ground segment, execs estimated 600,000 packages across the FedEx network are being rerouted because of the inability to find labor. FedEx slashed its full-year profit outlook, sending the stock down 10% on the week. The supply chain problems at these ginormous companies were priced into the stocks. Then shares of FedEx gained on their earnings days. They didn't, and now they're marking down their earnings estimate in the peer set. I think it's a risk more to earnings, and if you think about it from a margin perspective, sort of any big hit that we make a profit margins can pull your EPS growth numbers down pretty significantly. RBS Capital Markets Lori Calvasina told me on Yahoo Finance Live. Calvasina added the corporate commentary is on public supply chains has gotten more alarmist of late, and her team is diving into why supply chains are so bad. So supply chains are the next problem for the bulls to pass off as no big deal. Knowing them, they will have an excuse ready to go. Just don't pitch rose-colored glasses to me on. So this is what this person's saying. Odds and ends. There will be no let up in corporate earnings this week as a few important names report. There's some more from Micron. I want to read from Micron, the chip maker. Stock has treaded water since it last reported on July 1st, as analysts voiced concern on inflationary costs, but headed into earnings this week, there could be a few near-term upside catalysts in play. For one is valuation. The stock is trading at a paltry 6.8 times forward P/E multiple, despite strong demand for chips globally. Two, the company announced on August 2nd it initiated quarterly dividend that will be paid out in mid-October to shareholders of record October 1st. So if you own some Micron stock, you'll be getting some dividends, it looks like. And I've looked at Micron before because of the demand of chips. But also you get like things like Apple making their own in-house chips now. Paychecks, if you're attempting to handicap the October 8th non-farm payroll report, then pay careful attention to earnings this week from payroll service. Paychecks uniform seller Cintas. All right. Then there's CarMax. Shares are up 13% a month ahead of its earnings week, as Carvana's CEO Ernie Garcia explained to me. Used car pricing has strengthened again, which is usually a good thing for used car sellers like Carvana and CarMax. Yeah, Beth down 20% in the past month. I mean, yeah, because like it's like sparse. People can go to Bed Bath and Beyond like that. It's a soft retail sales, and industry-wide supply chain challenges for home furnishings. Bed Bath & Beyond CEO Mark Tritton is in the middle of transforming the retailer and has a lot of fans on Wall Street. Let's see how the street reacts to the company's earnings day. It's too tough to call for Bed Bath and Beyond. Yeah, so this is from Yahoo Finance. I'm going to grab up this last article here. If you're on the YouTube side, please do subscribe, turn on the bell notifications. Here to blockchain, tech, and finance news. I'll throw up this last article I have to read here. And again, all of these articles will be in their links on the recap videos. Let's go into the transition here. So from NDTV, in the tech side, NASA astronauts aboard ISS to use augmented reality technology to repair tools. NASA's T2 augmented reality T2AR project aims to help astronauts carry out maintenance of tools easily. This is edited by Gadgets 360 News Desk. This is astronaut Soichi Noguchi tries out the new AR glasses aboard ISS. NASA is developing augmented reality AR application for astronauts to enable them to inspect and maintain equipment on the International Space Station ISS, needing assistance from control. This the aim to reduce the impact of communication delays between ISS crew and NASA Mission Control in Houston, Texas, U.S. While the communication delays unnoticeable mostly, NASA says the project will increase autonomy of the astronauts in making quick and informed decisions. This project will primarily benefit the space agency in exploring the moon and eventually Mars. Usually, astronauts are given instructions from ground control on a PDF file that can be viewed on a computer or a tablet, but holding these gadgets in hand while working on machinery in a tight space limits productivity. In a blog post, NASA said the T2 augmented reality T2 AR project helps display instructions in the goggles of astronauts and direct their gaze with 3D cues to the actual work sites. It can also follow verbal instructions to navigate procedures. This eases the process of inspection and maintenance. The AR technology uses Microsoft's HoloLens with custom-built AR software. In April, astronaut Soichi Noguchi of Japan Aerospace Exploration Agency JAXA was tasked with maintenance of a piece of exercise equipment. With the help of new technology, 2 more ISS astronauts used it later if some more tests are planned. AR tools hold the promise of allowing us to prepackage guidance and expertise, says Brian Dan, ISS associate scientist at Johnson Space Center. He said the space station is the perfect platform to test AR systems and refine these tools. There has been renewed focus on exploring the moon as a stepping stone to reach space farther away from Earth. Through the Artemis program, NASA intends to use new technology for lunar exploration and prepare for human missions to Mars. To make the most of these missions, NASA has developed some new technologies, and one of them is augmented reality. To make the most of these missions, NASA has developed some new technologies, and one of them is augmented reality, as the communication delays beyond the moon are sure to last longer. Artemis aims to land on the moon's south pole, where no human has gone before 2024. This week on, so that's this article here I found interesting of AR using AI. Not AI. Artificial reality AR to repair different aspects of ships and stuff like that. So that's what I have on this rereading of the news today. If you're on the YouTube side, please do subscribe, turn on the bell notifications. Here to blockchain, tech, and finance news. I'll be doing this at best, triangly every day. As best early in the day. It needs to be early in the day, like that. Just reading the news and figuring out what there is I found interesting and worthwhile within blockchain technology and finance, whether it be stocks, cryptocurrencies, and the sort of industry globally either way. So with that, have a nice, safe day. Cheers.